Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you company again. Let's get across what happened overnight. Fairly mixed, but mostly positive, as we saw bond yields fall. Now, in the absence of any major economic news, investors on Wall Street focused on earnings. It was a choppy session, which did see the Nasdaq finish mildly in the negative, but the others managed some gains there. In terms of the mega caps, they were mixed. Apple, Amazon, Meta and Microsoft all are reporting this week. And as you can see, they were fairly mixed across the board. Nvidia fell after the Wall Street Journal reported that China's Huawei Technologies was preparing to test an AI chip designed to replace some of Nvidia's higher-end products. Domino's Pizza posted a surprise decline in first quarter same-store sales in its biggest market of the States as elevated inflation and economic uncertainty hit consumer appetite for its offerings. Boeing shares helped keep the Dow in positive territory after Bernstein raised the aircraft maker's stock rating and price target. Well, US Treasury Secretary Scott Bessent says many of America's largest trading partners had made very good proposals to avert US tariffs, and one of the first deals to be signed will likely be with India. He added that China's recent moves to exempt certain US goods from its retaliatory tariffs showed a willingness to de-escalate tensions between the world's two largest economies. Risks are high that the global economy will slip into a recession this year. That's according to a majority of economists polled by Reuters, highlighting that the tariffs have damaged business sentiment. 3/4 of those 300 economists polled cut their 2025 global growth forecast, bringing the median to 2.7%. Well, US Treasury yields have eased to near 3-week lows, the 10-year falling to its 4.22%, the 2-year, down more than 6 basis points to 3.69%. And the US dollar slid across the board as investors waited on further news of US trade policy. The Aussie rallying almost 2% to be up 64.3 US cents. And Bitcoin has continued its recent ascent to be at $95,000 US. Oil prices have eased as economic concerns from the US-China trade war continue to pressure demand. Brent crude futures falling around 1.5% to $66 a barrel. Copper's up 1.5%. Iron ore also rising to $99 a tonne, and gold rebounding after its recent sell-off as bargain hunting kicked in. Spot gold up more than 0.5% to $3,341 an ounce. Okay, let's get across what we're seeing from a US perspective. Steve Sosnick joining us from Interactive Brokers. Steve, welcome back. So, can we say the bulls are back, or is it simply too early? Are they still sitting on their hands to a degree?
It's interesting. I think actually the ones who are buying never really left. I think it's fair to say that, we saw a lot of investors sort of bargain hunting the whole way down, and they're continuing to buy as we go back up. Remember, markets are a funny animal, right? It's the only thing I can think of where demand goes up when the price goes up. So in and of itself, it's hard to say, how much of it's sentiment, how much of it is rally chasing. I think in general, though, it feels better, but I think it's more of a temporary pause. You mentioned Domino's Pizza in the intro, and the same store sales numbers were down. Okay, not a big deal, but they withdrew guidance. Now, it's not clear to me how tariffs are going to affect the home delivery pizza business, but right now every company is getting a pass because of the uncertainty. So companies that might not necessarily need to either withdraw their guidance or offer cautionary subjective guidance are getting away with it. That probably won't last more than a quarter because, next time around, it's going to have to be put up or shut up. But I think what happened was the sentiment got so bad. These companies are coming in better than feared, and again, are sort of getting a little bit of a pass when the market otherwise might not. I would think in a normal quarter, if Domino's withdrew their guidance on worsening sales, they would get throttled. But this quarter, they were essentially unchanged. It's an interesting psychological change.
Steve, the focus this week's very much going to be on four of the Mag 7, Apple, Amazon, Meta, and Microsoft. Look, it is backward looking. Are we going to get guidance from them, do you think?
Who knows? They'll probably get away with not saying much. I mean, the market didn't mind Alphabet not giving guidance, but they never give guidance, so they've actually established that precedent. I think in general, this is going to be the question of what can they get away with. I think United Airlines, I might have mentioned this last week, set the tone by giving what I call an if-then statement about their earnings. I think many you know CFOs or shareholder relations people realize that seemed to be a working strategy. And I think they're leaning into it more because you know what? Why be held down to guidance if the market's not going to require it of you? Why make life more difficult for yourself? I get why they're doing it. I don't necessarily get why the market is so charitable about it right now.
How do you see market perceptions of what's going on at a policy level as far as those tariffs are concerned? Of course, the Trump administration, I think they're saying they've spoken to 200 countries. There's not that many on the list, are there? But nonetheless, they're saying we're about to strike a deal with India. China's not far away. China has disputed there's been any talks whatsoever between the two.
Yeah, I mean, this is going to be news flow. I mean, one of the things I remember very vividly in the first Trump administration was sort of, waking up to see futures rallying on vague, unsourced stories that there were, breakthroughs in trade negotiations with China. So this is going back almost 8 years now. So we've seen this playbook before, although they didn't tear the old rules up before they tried to negotiate new ones in that situation. It sort of boggles the mind to think that you can have a deal with everybody so soon. Again, there aren't really 200 countries, but again, they're including. It's almost like a game where you have all the territories in there as well and counting them as countries. So who knows? I don't know if the Penguins have called yet, but basically this is not something that's going to be easily negotiated in 90 days. They've talked about doing almost like a reality show type of competition where each block gets to give its best shot over the course of a week, and then when that week is over, they're on to the next week. Literally like the format of a reality show. So I don't know what to make of it. The market is being quite charitable about it, again, because I think that what we're seeing now is worse than expected, but better than it was. And so, again, and I think the mindset now is of a lot of the market is let's give this the benefit of the doubt. Why let nervousness get in the way of what seems to be a bit of a rally at the moment?
Well, of course, we do have some hard data to go on this week out of the States, GDP, PCE as well as job numbers. What are the expectations there, Steve?
Well, GDP, we're looking at as much as 3%, but there, you've got some wildly divergent figures from the Atlanta Fed, the New York Fed, in terms of some of their predictions. The problem here is they're still backwards looking. The numbers are coming from the first quarter in that case. And remember, the tariff announcement didn't come until April 2nd. So you're not really going to see that in there. The employment numbers you may start to get a little bit more of a read, but again, those are still those will be the April numbers, and there's a bit of a flux there. I think right now there's more paralysis than there is actual movement in a lot of cases. And again, some of the spending numbers have been pretty good because people have been trying to front run the potential effects of tariffs. I think you've had some. I'm not going to call it panic buying, but get out ahead of the type of tariff buying. So I think you're going to see a very mixed set of results. I don't know that the inflation numbers are going to be super encouraging. And remember, that's to me is really going to be the crux of it, because if it comes down to it, where we still are seeing okay employment, we don't expect a lot of layoffs, even if the pace of hiring isn't necessarily zooming ahead. So that would mean the labor market is okay, but you still have this huge uncertainty regarding prices going forward. Well, if the Fed has to pick among the dual mandate, they're probably more likely to say, all right, you know what, we can sort of give a pass to the labor side because it seems okay, not necessarily dire enough to require intervention. We're still, even at the worst case scenarios, we're still looking at unemployment rate with a handle of 4, which is historically enviable. But you've got this potential inflationary uh, concern, and it's bleeding through certainly into sentiment numbers. And so that uncertainty is everywhere, and I don't know that the economic reports are going to talk to that necessarily. We are going to get a consumer sentiment number, the conference board, Tuesday into Wednesday, and then the Michigan numbers, which come out every 2 weeks, they're coming out on Friday again. So that's going to be a more interesting read when we start to see that. But even there, what people say and what people do don't necessarily coincide.
Well, Steve, what are you noticing with some of those alternative assets? Certainly, the rally in gold seems to have run out of puff at this point, and investors may be turning out of Bitcoin. That's back to 95,000.
Yeah, well, it doesn't hurt that MicroStrategy continues to buy, or I guess strategy, but I'm just going to call it MSTR, continues to buy. So that keeps it propped up. Gold, if you look at it, the chart pretty much got parabolic. Not necessarily on the shorter term chart. It was fairly linear, but if you look at it on a longer term chart, it definitely has that parabolic tilt to it. And parabolic moves are by nature a bit unsustainable, or certainly a bit precarious, because it sort of means that there's a bit of a panic going on. Somebody's really in pain when you see something like that. I think there are reasons for gold's rally. Again, it was sort of the dollar has calmed down, so the anti-dollar aspect of that, I think, has taken a bit of a breather. Whereas Bitcoin is sort of okay with that because some days it's a risk asset and follows the Nasdaq. Other days it's the anti-dollar, and I think it's still much more of a risk asset. Whereas gold, is more of the classic hedge, or certainly a dollar hedge, U.S. dollar hedge, I should say. And so, it doesn't surprise me that gold had taken a little bit of a breather. You do have to wonder how much of that was originally precipitated by central bank buying, but there's been a lot of individual buying as well, whether it's the GLD ETF. Costco in the U.S. sells gold bars, which are pretty much impossible to get your hands on. So there is a bit of a feeding frenzy in that regard. And so it's not unsurprising to see it take a bit of a breather after a run-up of that nature.
Always great to get across what you're seeing from Interactive Brokers. Thanks for joining us.
My pleasure, Andrew. We'll talk again.
All right, let's just come back home, check where we're likely to get going, and SPY futures indicating a positive start there, up 0.1%. Stay with us because we're going to get right across that in just a couple of minutes' time.